Welcome everyone to InsurTech Rising Live. Over the course of this week, we will be bringing you a range of webinars, thought leadership articles, as well as our first e-magazine of 2019. Remember to visit the InsurTech Rising 365 blog for all Digital Week content. Next up for InsurTech Rising Live is Walid Al Saqqaf, founder of Insurblog, to deep dive into blockchain. Have we only just seen the tip of the iceberg for this technology, or is it the novelty starting to wear off? We will be live tweeting this webinar, so you can join in the conversation using the hashtag InsurTechRisingLive. While our webinars this week have been pre-recorded, you can still submit questions during the presentation. Send them to us using the Ask a Question module on your screen or by tweeting us. We will be passing these on to the presenters and coming back with a unique article featuring the answers. You will also notice that we have compiled a resource list of all of our webinars. Feel free to download and click through the information we have created for you. I will now hand over to Walid.
Thank you, Rotio, for that introduction. Hi, everybody. My name is Walid Al Saqqaf. I'm the founder of Bloxx, and I'm going to discuss with you that blockchain is dead. Long live blockchain. So a little bit about me. I'm the founder of Bloxx, which I will tell you a little bit about shortly after the next slide. Previously to founding Bloxx, I was Beazley's in-house entrepreneur and also their blockchain innovation lead. By my background, it's really as a founder of startups. I've built a wide range of startups in both the mobile and desktop space, mainly in the B2C space. The most popular one was Trusted Places, which I co-founded in 2006, and it was acquired by Yale in 2010. I did some fintech consultancy in Eastern Europe and Russian financial institutions of all places, which was very entertaining. And I started off my professional career working at Barclays in corporate banking. So what is Bloxx? I started Bloxx in March 2018, mainly because I noticed that in the insurance space, there was still a lot of misunderstanding of what is blockchain. Is blockchain Bitcoin? Is it the dark web? Was some of the most common expressions I would hear. So I started off where the idea was I would interview on a weekly basis thought leaders who work in blockchain in the insurance space. So I've interviewed quite a few incumbents, from Bob Crozier at Allianz to Fizzy at AXA, or even Inga Beale at Lloyd's when she used to be a CEO. I've also interviewed, of course, a lot of the consultancy firms who spent a lot of time and efforts looking at how they can use blockchain. The technology providers, IBM was their Hyperledger Fabric, Corab from R3, and Chain9 and Bloxx, who are blockchain developers here in London. But also I've looked very carefully at the networks. So the two major ones to look at are B3i and the RealWorld Alliance. They're both consortium of insurers looking at blockchain technology in the insurance space. Accord, as you probably all know, is here to work on the setting up the data standards within not just blockchain, but in the insurance industry. And Insurwave, which I'll be discussing later in the slides, the marine insurance blockchain co-developed by Maersk, EY, and a bunch of other parties. But in all these things, you always have to look at the trailblazers, the InsurTechs, who are testing new ideas and not afraid to take significant risk in developing their new models. And we'll be touching on one of them in the presentation. So I like this cartoon because I found it in 2018, and as you can see, it says, where should we focus this year? And the gentleman says, blockchain, it will change everything. Everybody's talking about it. The potential applications are endless. We don't want to be left behind. And what exactly is blockchain? Also, have you looked at artificial intelligence? And if you want, this is really quite reflects, that up till, let's say, maybe end of 2018, we were quite in still a period of hype around what can this technology do. And that kind of led to this next slide, which is people starting to think, is blockchain dying? Have we come to the end of the hype, and now we're in this what called the trough of disillusionment, which is part of the Gartner Hype Cycle. Now, there's two ways you can look at it. You can say, yes, blockchain is finished. There's less big PR stories about it. It was just overhyped, and I should not consider it. But actually, what the Gartner Hype Cycle does very well is indicate that you do go through this trough of disillusionment, because between this period of excitement and this period of trough of disillusionment, there is real people who are working on those projects and trying to figure out how they can make it work and get real tangible value out of it. And we're starting to see that happen. I'm going to give you a few case studies to explain to you why I believe that blockchain still has enormous potential. The fact that we're not so excited about it is actually a good thing, because it helps the ones who are working on it to have the focus that is needed to make this technology happen. So let's just take a step back and let's look, what is the problem that we're facing here in the insurance industry. Now, in this diagram, you can see, you've got a client, you've got a carrier, a wholesale broker, and you got a bunch of players. And what is here to show through this little book kind of icon is that each of those players have a ledger, or if you want, a database. And the way they communicate between each other is a bit haphazard. It's not very organized. It's inefficient. It's expensive, and has significant security and human error vulnerabilities or risks, if you want. The way they communicate also, they don't always use the same data standards. And as we all know, the insurance industry is still very much in love with paper, which is kind of crazy when we are supposed to be living in a digital era. But this is some of the problems that is facing this industry. And what blockchain is really here to do is, through digitization efforts that is happening in the insurance industry, is to make sure that all of these ledgers work on a shared, distributed, auto-replicated, and permission-based ledger. So that information, for example, that the client puts, or that the carrier puts, or the bank receives, can be accessed on a permission basis. And it is distributed across the network, and it always is in the same data format. And that is the opportunity if you want a blockchain. It is removing some of the duplication, as some of you in the insurance industry will know the famous word of rekeying of information. All that, you can do away with it. So let's again resume what is blockchain. And for me, it's a digital ledger that provides a shared single source of truth between multiple trustless parties. And it has the following attributes. It's distributed. Now, as some of you may remember the days of Napster, LimeWire, BitTorrent, these were systems that were put into place where people could exchange information in a distributed manner, i.e. that wasn't a central database. It is tamper-proof. Often it is called immutable. I personally prefer tamper-proof because within a closed ecosystem of a blockchain, you can change information as long as consensus. But it provides as tamper-proof if there is a party within that ecosystem that tries to act in a bad way. It is transparent and uses a set data format. So for example, in the insurance industry, it can be ACORD. It works through consensus, where the parties agrees to, for example, what is the governance that's going to regulate the rules and the regulations of a blockchain ecosystem. It can be public, and the most famous one is Bitcoin or Ethereum, where everybody has access to information. It can also be private. So in the enterprise world, blockchain ecosystems are usually private, or they can be a hybrid between public and private kind of blockchains. They use smart contracts, and I'll be discussing that in the next slide. And they're cryptographically secured. So just want to say one point. Bitcoin, up to now, is the largest implementation of blockchain technology. But Bitcoin is not blockchain. It's an interpretation of the use of blockchain technology for a cryptocurrency. Bitcoin has never been hacked, and that is because it's cryptographically secured. So let's look at what is a smart contract. Now, a smart contract is codified business logic. So effectively, it's like if you're taking a contract and you're transforming it into code. And the way it works is that if X occurs, do Y, where X is the objective trigger And Y, for example, can be the insurer's contractual obligations. That contract is self-executing, i.e., it does not need human review for it to happen. And it is triggered, or the X if you want, by a deterministic event. And that can be, for example, there's a hurricane. If a hurricane hits a certain area, do those payouts. If my flight is delayed, do this payout. So again, it's a trigger of an X that results in a contractual obligation of the Y. And it uses something called oracles, which are external sources of database that gives you live information on whether X has happened, whether my flight was delayed or whether there was a hurricane or tornado, for example. Let's look at the insurance blockchain ecosystem. So in the insurance industry, you mainly have three players who provide blockchain technology. You have Ethereum, which is public, but can also be used in the private enterprise space. And at the moment, there's really two companies who have been playing with that. There's AXA with their flight delay insurance policy by Fizzy. And you got Etha Risk, which is an InsurTech, which I'll be discussing later on in this presentation. You also have Hyperledger Fabric, which specializes in building enterprise-grade blockchain systems. Now, the main developer within that blockchain is IBM. And some of the companies who have been using it is AIA, Marsh, AAIS, which I'll be talking about, and AIG. And the other one, which I would argue has, in 2018, taken a significant share of the insurance blockchain space is Corda, which is developed by a company called R3. Now, Corda works with numerous different bodies that are here to create data standards. I'm using here the example of Accord, and that's been used with the RiskBlock Alliance, B3i, Insurwave, AIG, Generali in Italy, and the AIA in Hong Kong. So I've listed to you the ecosystem. I'm just going to do a little dive into some of the interesting case studies. So probably some of you would have heard about B3i. It was initially set up as a consortium of insurance and companies who got together and trying to pool their knowledge and their resources to on the work they're doing in blockchain. In 2018, B3i became a registered company in Switzerland. And their first production-grade product that they released earlier this year is their EXO catastrophe product with regards to insurance. And some of its attributes is that it has a shared ledger, so that the cedent, the broker, and the reinsurer always have a single source of truth, i.e. there's no need for leaking information. We all agree on the information that is there. It's within an Accord data standard. It uses smart contracts, where it builds premium schedules and the associated payables and receivables. And it distributes materialized updates of losses to all the participants within the blockchain. And personally, the one I get very excited about is the marine insurance blockchain. Now, that's been developed by Maersk, EY, Willis Towers Watson, MS Amlin, AXA XL, and the technology provider Gartner. And if you want, it's like a marine insurance blockchain. And what Insurwave does is that it takes clients, brokers, insurers, and third parties and connects them to distributed common ledgers that captures data about entities, risks, and exposures, integrating this information with insurance contracts. So what this means is that a ship, when it leaves dock, there's up to now, it used to have exchange of a lot of different papers and information between different parties. All these have been digitized and have been put onto the shared ledger. And it has information and smart contracts, which works with a set of sensors and information from satellites to inform both a ship captain and the insurer on what paths a ship needs to take to avoid a war zone or to go through the war zone but save on fuel, for example. So it gives real-time information for the captain to make a decision. And that real-time information can also be used by the insurers to get a real-time appreciation of risks and adapt the pricing of the policy where required. That is very different to the way we traditionally measure and price risk, which is on historical data. Here, it's about accessing real-time data. And Maersk and EY on the Insurwave has been growing their blockchain project significantly in 2018, with a lot more coming up in 2019. I mentioned the AAIS in my blockchain ecosystem, and what it is the American Association of Insurance Services, and they developed something called the OpenIDL, which is Open Insurance Data Link, which is effectively the first open blockchain network that helps insurers, insurance companies, to provide information to their regulator in the United States, and for their regulator to share information back to those insurance companies. And it is one that has been growing and being adopted to significant extent in the United States. Etha Risk is one of the most successful and InsurTech players in the blockchain space. What they've developed is, if you want, it's like a toolkit, a blockchain protocol that enables individuals to develop their own insurance policy. It's a bit, if you look at those WordPress kind of sites, they give you the tools to be able to build websites, on the go. Etha Risk has done something similar, but enables you to build insurance policies if you want on the go. And some of the most successful ones they've done, which you can see on the slide here, is their flight delay insurance. They had launched it before Fizzy from AXA. They have their hurricane protection, which was developed actually by two individuals out of Puerto Rico after Hurricane Maria hit them. And here, the requirement they had was these individuals who were hit by Hurricane Maria had to wait at least 8 months before they could get a penny from their insurer for some of the damage they've had. So these individuals got together and they built a hurricane protection policy that provides you instant $5,000 to alleviate you from their hurricane damages. And it does that because it can use the information from the weather data that this hurricane has hit this location where my house actually resides. When I've done up to now 44 podcasts on InsurBlox, where, as I said, I've interviewed thought leaders in the insurance space who've been working on blockchain. And I've made a little concise list of what I felt were some of the key learnings has come out. What it is, one of the very important ones, you need to have a clear business case. Blockchain isn't a hammer looking for a nail. It works very effectively, but you got to find the right business case. Don't do blockchain for the sake of PR. Those days are gone. You could have done that in 2017, a little bit in 2018, but not now anymore. You really need to have a clear business case. You need to have a customer centricity approach to building and then just the solution. That is why I would argue the Insurwave one is so successful, because they had from day one Maersk, the customer, at the center of trying to build a marine insurance blockchain. And one of the things that they quickly learned is that you can't replicate existing business processes onto the blockchain. You need to reinvent them. Between the moment that the guys at Insurwave did this proof of concept for Insurwave and when they released it at production grade, they had to re-architect their system 3 to 4 times until they got it right. And blockchain, it works with friends. Blockchain is not a solitary sport. It is one where you got to work with all the players within your ecosystem, whether it is your broker, whether it is your carrier, whether it is your reinsurer, any other third parties with whom you interact. The more participants there is on the blockchain, the more value that is generated for the entire ecosystem. And when you start a blockchain project, you're not here to boil the ocean. You're here to start small and focus and then slowly expand. You gotta take an iterative approach. So you start with a minimum viable product, or as my friend Mark Simpson says, and you move towards a maturing, lovable product. These things take time. They do not happen overnight. And you got to start with one focused business case, take a customer-centric approach, and then iterate until you can move to something that is bigger. Insurwave did not start with cargo and hull and everything together. They started very clearly with hull straight at the beginning. So I want to look a little bit more in terms of what are the other technologies that blockchain sits in. You've got artificial intelligence, you've got Internet of Things, you've got robotics, you've got machine learning, and big data. We've heard a lot of these keywords over the last few years, and there's been a lot of hype and excitement around each of them. I would argue that each of these technologies, whilst exciting, including blockchain, exciting on their own, work better when you look at them as a new technology stack, because that's where you can really hit the potential. If you think about it, IoT, for example, it is predicted that by 2020, there will be 20 to 30 billion IoT devices that will be connected to the internet. And the problem IoT have is that their networks are not perfect. Devices are constantly sharing critical information back and forth over the internet, which makes them primary targets for hackers. Thus, privacy and security is constantly a source of major concerns. But at the same time, the data that IoT provides goes into, for example, artificial intelligence, goes into machine learning, goes into big data, but it is communicated in a very insecure way. And for me, one of the problems that blockchain solves for both AI and IoT is around the security fault lines, because most IoT devices are connected to each other via public networks, and it needs to say that these are very, very vulnerable points. Blockchain, at its core, as I mentioned at the beginning, is cryptographically secured. It is a distributed ledger, i.e., there is no central point of attack. And through this use of smart contracts, and then you could argue that AI, it could be the next evolution of smart contracts, you now have a stack that enables us to face the challenges that we have in the decades to come. Because IoT is going to keep growing. We're going to keep producing a ton of data, which at the moment we're storing. But data needs to be processed in real time. And the people who will do that heavy lifting are the AIs, are the machine learnings that will transform this data into meaningful insights for us to make decisions on the spot. So for me, as I say, blockchain and this array of technologies represents the new technology stacks that our organizations need to be preparing for. Now, again, coming back to the point, is blockchain dying? Well, no. There's been over 50 blockchain real-world use cases around the world, and that is growing on a monthly level. And some of the ones I'm going to touch upon, for example, is the ones listed on the presentation. TradeLens is a digital platform that empowers businesses and authorities along the supply chain with a single, secure source of shipping data, which enables more efficient global trade. And that is powered by IBM, and actually Maersk is a key player in that. And another blockchain consortium, if you want, is again powered by IBM, is the Food Trust. And what it offers is its participants, which are retailers, suppliers, growers, and food industry providers, with data from across the food ecosystem to enable greater traceability, transparency, and efficiency. For example, this could have been very useful for us in the UK when we had to deal with the horse meat crisis quite a few years ago. But they had something along those lines in China, where a chicken that was sold in supermarkets was actually expired, that actually led to quite a few significant cases of food poisoning. MOBI is another one, and MOBI stands for the Mobility Open Blockchain Initiative, and it is composed of the largest car and car parts manufacturer who are working together in creating common standards and common ways to community identify themselves and make payments. And also in another industry, of course, is IMI, which is the Innovative Medicine Initiative. And it is an EU public-private partnership which is looking at building a blockchain-enabled healthcare program that aims to establish a common blockchain ecosystem for pharmaceutical development, manufacturing, and distribution of these medicines. And the last one I'm going to give you an example of is Marco Polo, which is an initiative to develop an open account trade finance platform using blockchain technology. And these are just a few examples. There are many ones out there. But I work under the premise that blockchain, in my opinion, in the next 15, 20 years, or whatever number of years will be, is going to be this new foundational layer that's going to connect not just firms within an industry, but across industries. And all those initiatives that you see here are just the beginning of it. And we're going to see a lot more, and eventually you're going to see them interconnect. Or if you want another example I like to give, it's regarding the cargo containers. Some of you may know, but up to the 1950s, cargo containers were of different shapes and sizes. So which meant that a boat leaving from Shanghai or Hong Kong heading to Southampton, you needed to ensure that the ports had the right cranes to be able to load and offload the containers from those ships. Now, in the 50s, a bunch of shipping players got together, including Maersk, and said, we need to standardize those cargo containers. This simple act has facilitated significantly the growth of the trading economy around the world. For me, blockchain is about standardization of the digital containers and standardization of data. Once you've done that, then all these organizations that are listed on this slide, Mobi, TradeLens, B3i, RiskBlock Alliance, Marco Polo, and IBM Food Trust, they're all going to be able to share information in a seamless way. So what does this mean to your organization? And how can you bring blockchain to it? Well, as I said, in terms of the learnings, you need to clearly define what is the problem. And you need to identify what are the blockchain features that could address the problem and why blockchain trumps traditional technologies. Because in most cases, a central database with a bunch of APIs can do the job a lot better than blockchain. Swiss Re, for example, realized that 75% of their proof of concepts did not need a blockchain. And I believe the AIA in Hong Kong realized that 90% did not need a blockchain. So, and that's okay, that's normal. You know, people are experimenting and they're trying to figure out how to use the technology. But hopefully this slide and the previous ones will help you avoid some of these issues. So ideally, when looking at a problem and deciding whether or not you should use blockchain instead of traditional technologies, you need to make sure that the solution you're trying to give to that problem has one of those three features. That you need a distributed ledger, i.e. a single version of the truth. Then you need a system that is tamper-proof, that is transparent and has a set data format, that can work through a system of consensus, especially around setting up the governance, that has a need for smart contracts, and that is cryptographically secured. I would argue if you can find at least three of these points, then you probably have an opportunity for a blockchain use case. And then you need to be able to describe the impact this solution can have to the rest of your business. Is it a cost-saving one? Is it one about building this new trust layer between the participants in the ecosystem? Is it one about improving the data quality? Is it one about reducing capital risk or improving your cash flow? Or is it also about the ability to process large inflows of data, i.e., for example, using IoT with smart contracts? So even on an individual level or an organizational level, I would argue get on the education curve. It's very important to start at it as soon as possible, because whether we like it or not, blockchain has arrived to insurance. It has arrived through the B3i, through the RiskBlock Alliance. It has arrived because of the buyer side, where you get individuals, organizations like Maersk saying, I want to have a digital platform now. I do not want to interact with you guys with paper again. And you have to remember Bill Peroni from CEO of Accord said that the latency period is shrinking. What I mean by that is that between the arrival of a new technology and it becoming mainstream, that latency period is shrinking. So if you don't start getting onto the educational curve sooner than later, then you may miss the boat. So how can you do that? Attend conferences. There are literally hundreds of blogs out there, articles that are being written on a regular basis. Play with the technology within your firm, or even join a consortium like B3i or the Risk Block Alliance. Most of the blockchains out there is open source. So if you have some hidden coding skills, you can download it and have a go at yourself. Or you can also listen to thought leaders on InsurBlogs and get our insights on how we feel the market can evolve. And I'm just going to perhaps conclude with this slide. So just to say, InsurBlogs, we're this cross-industry and technology educational podcast. In 2018, we focused mainly on the insurance industry, but in 2019, we're reaching out to other industries such as finance, healthcare, supply chain logistics, and a lot more to find out what are their learnings about when they use blockchain and bringing that back to insurance. We also have a consultancy service around blockchain education, helping you how to build and identify a POC opportunity and to help you blockchain strategy. I will be delighted to answer any of your questions, but I believe you've got a Q&A box, so feel free to submit your questions there. And hopefully I'll have the pleasure of meeting you in person. I participate at many conferences, but I'll be happy to catch a coffee and catch up with you around any questions you may have on this content of this presentation. Thank you very much for your time, and see you later.